markets. My guests are Mike Smerklo. He is ServiceSource's chief executive. He joins us from San Francisco. And also with me here in the studio, we have Leslie Hemenetz. She is a Bloomberg mergers and acquisitions and initial public offering analyst. Leslie, thanks so much for joining us. Can you just set the stage for us? Because I want to get Mike's thought about what it was like for ServiceSource particularly, but what's been the market for initial public offerings?
So we started out strong this year. We were going to be, since 2007, biggest IPO. We were going the downfall since 2007. It was on the upswing. We had big IPOs in March. That was the busiest month. And overall, comparing it to 2010, we're up 20%. But if you look at August, there have been 64 withdrawn IPOs or postponed in the year, and almost 20 were this month. So August hasn't been a great month. But if you look at tech has boomed. A lot of those big IPOs came from March, May, April, with ServiceSource as being one of them. If you look at the top performers, the top 5 year-to-date this year, 4 of them are from the tech market.
Mike Smerklo, do you feel as though you somehow have managed to thread your way through the eye of a needle here? You came out as an initial public offering in March.
Well, Pimm, we've had, it's been great coming out as a market leader in an emerging category with demonstrated growth. Real technology and real customers has certainly helped us, I think, in investors' eyes, weather this storm.
So what was it like during the initial public offering process? Did you feel as if there was a window that was slowly closing because investors were not that enamored of IPOs?
Yeah, well, we were actually in an interesting time. It was there was unrest in the Middle East. There was a tsunami that hit during our IPO, and it did felt a bit like a battle. But I think our story and having real results and real customers, being able to validate what we did and what we do, enabled us to get our story out and have people get really excited about it.
Leslie, the shares of ServiceSource up about 49%, 50% since the initial public offering back in March. Is that indicative of what has happened with most of the initial public offerings, or investors just flip them and say, I don't want any more of this?
Not quite. Well, I mean, if you look at the pops, those are always a big thing. And ServiceSource popped 20%. LinkedIn was the big name, popped 100%. We look at LinkedIn now, it's at about 84%. Then you look at the other ones that are in the top 10. The top 10 is only about 30% since its IPO. So you have these high numbers of 80, 84. You have 40%, but after that, there's not much there.
And what about the non-technology initial public offering market? Good, bad, indifferent?
If you look at the withdrawn, it's barely any technology. It's a lot of financials and consumer market areas that really haven't hit the IPO front. Whereas when you look at technology, 23 technology IPOs this year, of them, 20% of them have priced higher what the price range was, which is very strong compared to, you look at the 135 IPOs this year, and only about 19 of them have actually priced above that range.
I'm taking away that it pays to be in the technology business if you want to go public.
Right now it does.
All right, I want to thank you both very much. Leslie Hemenetz joining us from Bloomberg, mergers and acquisitions and initial public offerings analyst, as well as Mike Smerklo. He is the chief executive of ServiceSource.